All right, good evening, my friends. My malaise is off the charts because I am quite fearful of what's coming. So let's just play this real quick.
Oh, I have a bad feeling about this.
Yeah, that's exactly how I feel about our financial and economic system, my friends. So we'll take a look at some bank stocks here. This sector got absolutely fucking gobsmacked today. Western Alliance Bank Corp, also a regional bank, a little bit smaller than Silicon Valley Bank, but nevertheless, went down 47% in a day. Now it's back up 6.5% after hours, probably with very minimal trading. So, not giving financial advice, I wouldn't touch these banks with a 10-foot pole at this time. So, First Republic Bank, I was told they're well capitalized and the U.S. banking system is strong. Then how do you explain this almost 62% decline in a day? These bank stocks are usually boring. It had 131 million shares volume, and it got down as far as $17. Man, brutal. And the 52-week range is 174 is the top. Hope you're not riding that one down. And KBE, which is a S&P bank ETF, it basically takes all the small and regional banks and kind of combines it together in one ETF, which is exchange traded fund. You can trade it like stocks, but it really kind of acts like a mutual fund at times. It went down 10% today. That's a huge move in a bank ETF. So the day range, that's the bid ask. The day range was 35 to 38. So it went down $4 a share, down 10%, almost 10% in a day. That's a significant move for a quarter, much less a day. So whew, stay tuned. So we're gonna switch over to Motley Fool. This is the main video I wanted to make. I didn't make it till today. They don't get to the point to the middle, but a major warning is sounding on Wall Street for the fifth time since 1870. So there is no 100% sure indicator that will accurately predict when a bear market or crash will occur and how long it will last, or how steep the declines will be. However, there are indicators that over long stretches of history have provided flawless or near flawless prognostications. When it comes to forecasting a recession or predicting where the stock market will head next, the United States money supply, which I've mentioned in the past, is one such leading economic indicator with an extensive track record of success with certain parameters. So this is M2. We looked at this chart earlier, a couple days ago actually, and it's going down. So what's unique about that this is from 1980, but what's unique about that is it never goes down, at least according to this. And I was wrong about two things. There were 16 bank failures under Donald Trump's administration. He was just cleaning up some of Satoru's fuck ups. So we don't see it go down on this chart because it happened before 1959, which is the lower bound of this particular data set. So here is a list of all of them. The 1870s depression, just take a quick look at this one. It was called the Panic of 1873. So business activity contracted 33%, and it lasted 5 years and 5 months. Yikes. They called that the Long Depression. So you kind of know it was serious business. Let's see what we got here. Civil War speculative bubble. The Coinage Act depressed the price of silver, which hurt North American mining, and the Great Railroad Strike of 1877. The United States did go back on the gold standard in 1879. It was temporarily removed so that they could fund the war. Probably one of the reasons why they won, anyway. And the Long Depression is said to be the entire period from 1873 to 1896. That is 23 years, my friends. The next one is the Panic of 1893. When you have a period called the Panic of something, it's, it's a pretty good idea that it was pretty bad. What's this new column in here? That's business activity, right? No, trade and industrial activity is the second column. I knew that. Panic of 1893, reading the failure of a railroad, withdrawal of European investment, and a stock market and banking collapse. We might be in the middle of one or both of those again. And the panic was participated part by run on the gold supply. gold supply was fully convertible to gold and silver, my friends. The Treasury had to issue bonds to purchase enough gold. The height of the U.S. populist movement. Hmm. Again, history doesn't rhyme. Oh, no, history doesn't repeat, but it sometimes rhymes. The free silver movement. Unemployment may have peaked anywhere from 8.2 to 18.4%. Yikes. 1 year and 5 months long. And the next up on the list, that's the second time it happened. The third time that happened was 1921. I remember this one. This was the first real post-Fed, uh, post-Federal Reserve recession. So it lasted a year and 6 months. Business activity went down 38%, and trade and industrial activity went down 32%. So the 1921 recession began 10 months after the post-World War I recession. As the economy continued working through the shift to peacetime economy, the recession was short, but extremely painful. That's what we should have done in 2008, but they fucking kicked the can, and here we are. And the reason why it was short and had a strong recovery is because the United States federal government didn't fuck around. They let the bad stuff get worked out of the system, and then a strong recovery followed. Follow this pattern, dipshits. Now, I don't believe the Beijing Biden administration is coordinating anything like well, if we get all these small and regional banks to fail, everyone would be piled into the big four banks, and then we can introduce the central bank digital currency. That requires a little bit too much competence, my friends. So, again, I kind of rule that one out. But we'll see. Pay attention. Always be paying attention. I will be. So, and then the next one pretty much goes without saying, the Great Depression. It had led up. It led up by pretty much 3 years of negative money supply growth. And the reason why the Great Depression lasted so long is because they did the opposite of the 1921 Depression. And the U.S. federal government went into just mad mode, a complete bloat of the federal bureaucracy, again, caused by the Federal Reserve. Okay, so banking panic, the Great Depression, I could talk about this for hours, but the Great Depression was exacerbated by the international commitment to the gold standard. Because again, the Fed was already fucking around and printing more money than they had gold to back it. So other factors: deep depression, GDP, industrial production, employment, prices fell substantially, deflation. A small economic expansion began in 1933, with gold inflow expanding the money supply and improving expectations. The expansion would end in 1937, and the ultimate recovery would occur with the start of World War II, and was credited to monetary policy and monetary expansion. No, the World War II did paper over a lot of things because a bunch of shit got destroyed. So we were pretty much the industrial capital of the world for decades until NAFTA, and Bill Clinton fucked that up. So, and George W. Nixon, lots of blame to go around. So one of the things that was pointed out to me today is unrealized gains or losses on investment securities held at banks. So, FDIC insured banks. So, normally this doesn't really wildly flail up and down a great deal. There's not much over 75 billion. Seems like a lot. But, and this is Trump era right here. This is the end of Obama right here. This is mostly Obama. This goes back to 2008. Yeah, this is mostly Obama. Obama was 2009 to 2016. So, and yeah, again, I don't know how Obama was able to keep these plates spinning, but he did. Well, zero interest rate and quantitative easing, or fuck ton of money printing got us there. So, but these are now, look at these, look at the size of these. This is like $675 billion in unrealized losses that are held on the bank's balance sheets. And you wonder why we're having a banking crisis right now. And I heard something that Silicon Valley Bank was leveraged over 100 times. And if you know anything about leverage, you can make a lot of money when your trades work, but you can lose a lot of money when they don't. And I think that's what ended up happening. And here we are. We are in probably still the top of the first inning of this guy, but my spidey sense is getting a this is going to be worse than 2008, and I feel sorry. Now I'm older. I don't know the target audience of my content. I assume you're all 50-year-old males, but uh, if you're like 34 years old, you've been fucked not once, but this is going to be your second hardcore fucking. And oh my god, add on all the other stuff, student loan bullshit, all the other stuff, ESG everywhere. I mean, I've always said that a lot of this bullshit culture war nonsense would end the minute there's adversity. And I have a feeling adversity's coming, my friends. No one's going to care about being misgendered when you're in a fucking breadline. So hopefully cooler heads will prevail and all that stuff. Oh, and again, I don't think Beijing Biden's diversity hire administration is skillfully leading us to a collapse. You can't confuse uh, malevolence and incompetence. It's complete incompetence. So again, the reason why we're here is because Beijing Biden's policies led to inflation, which led to the rate hikes, which is leading to these banks getting caught on the wrong side of a trade, and if they're levered 100 times to 1, that's whew, no bueno, my friends. So look at the size of these numbers, are huge. So again, I wouldn't want to work in a bank, but that's just me. So thanks for watching. That's all we're going to do. Have a good day, have a good night, and pick up some non-perishable food, and maybe some water too. We may be in for a rough ride. I will continue to report, though. Thanks for watching. God bless.